Well, welcome everybody. We wanted to spend some time on one of the most talked about categories in venture today, which is fintech. If you're in the market, you know that you can't go even a day, it seems, without hearing or talking about the latest fintech deal or trend. And from our perspective, there's certainly a tremendous amount of opportunity there. We've seen and experienced some of that already in our portfolio, but there's an equally, if not more exciting future ahead for the category, we think. And so to review the landscape and hit on some of the major trends, we're super fortunate today to be joined by one of the most plugged in and respected fintech investors we know, Charles Birnbaum of Bessemer Venture Partners. Welcome, Charles.
Thanks for having me. Good to see everyone.
Yeah, it'd be great. Why don't we just start off, for folks that don't know you, maybe just giving a quick background on Bessemer and yourself.
Sure. So I'm a partner here in our New York office at Bessemer, and I've been with the firm for 8 years now. Grew up within the organization. Our model is a mentorship model, for those who don't know, and Bessemer has a long-standing history in investing in fintech and financial services, as we like to call it, because it goes beyond just kind of pure software in this market when we're talking about innovation. We had a really rich history here, but the market has really exploded over the last decade. And I lead our financial services practice now. We have many partners who come in and out of the teams, but I try and run point on all of these areas for us. I come from a traditional Wall Street background, spent time in investment banking, capital markets, and spent some time in the startup world as an operator before coming to Bessemer in 2013.
Great, yeah. And thank you for your partnership. You've been an invaluable resource to us as we're looking at investments in the space. And in general, the partnership with Bessemer goes back for us well over a decade now. And you've been fantastic partners, and we're proud to be long-term partners of yours.
Likewise.
So, yeah, and I do want to get into Bessemer's approach, but I think first it'll be helpful to get, just to set the stage, get your view on why fintech is such a compelling opportunity today. Fundamentally, what's laid the groundwork for this massive shift that we've seen in recent years? And are you able to frame the size of the opportunity and kind of how and why it is so large?
Yeah, look, if you think about just zooming out, I remember when I first got to the firm several years ago and was really trying to wrap my mind around this industry. If you just look at the raw GDP numbers of where money flows in the US economy, the global economy, banking, insurance, real estate, and mortgage, these are among the top 5 categories, no matter what way you slice the data, besides healthcare and education. So, we have a large healthcare practice for this reason. Education, I do cover as well for us as a firm, but it's a different beast when you think about who the customer really is when you're selling to governments for the most part. But financial services is just, these are the oldest businesses that exist. You're talking about multi-trillion-dollar markets that can be disrupted quickly, or they can be disrupted very, very slowly. And I think there's ways to make money on behalf of our LPs, investing in both ways. And there's companies that go direct to consumer. There's companies that allow the incumbents to fight back with better technology. And we could talk for hours about financial services and fintech, but as you mentioned earlier, we have this roadmap approach, and we try and focus in on which areas at any given time we think are most ripe for entrepreneurs to attack in the time horizon that we try and generate returns.
Yeah, let's dig into that. I think the roadmap approach has been an effective one for Bessemer for a long time, and I think a lot of folks in the industry are aware of it. But it's really helpful in framing investment themes and a helpful way to think about opportunities. Can you talk a little bit about that approach in general, and then as it relates to fintech, kind of how it applies and how you think about roadmaps within fintech?
Yeah, roadmaps really are, what many people refer to as thesis-driven investing. And frankly, when I was recruited to Bessemer 9 years ago, a lot of people talk about thesis-driven investing, and I thought it was something that was a part of it. I didn't think it was as true and as meaningful and deep as we really mean here at Bessemer. It's how we live and breathe our investing practice day in and day out. Roadmaps can be as small as a Google Doc where you're starting to ideate with some of your investment colleagues on a ripe and raw new area of entrepreneurial activity that you're investigating, and it can eventually evolve into a full-blown, hour-long presentation that you might be reverse pitching entrepreneurs with and publishing content 10 years later, like what we've done with our cloud practice, cybersecurity, healthcare, fintech. These areas that are now rich. They start, the entrepreneurs really lead us to the water initially, and then we try and be very, very thesis driven in terms of using our multi-stage and the large size of our fund. I mean, we're currently investing at a $2.5 billion core vehicle, but each one of us as partners tries to go deep on certain roadmap areas where we can use the flexibility of our fund size to find the largest opportunities and get in them as early as possible and build meaningful ownership positions. And really, a roadmap can be as specific as cyber insurance, to use an example within my area, or as broad as payments, or as broad as cybersecurity. And they both exist. I'd say, within financial services and fintech, I like to use the term financial services because, as I say, a lot of these companies are big F, little t. A lot of them are vice versa, where they're really technology driven and technology forward, and those are the ones we tend to focus on more. Given we're kind of one of the preeminent software investors in the world as a firm, and trying to apply those skills and those resources to the financial services world. So within fintech, I have several sub roadmaps that we like to say, where we're double clicking and going deep, spending time with the incumbents, really trying to go inside out, and then going to find the companies as opposed to just reacting to inbound deal flow.
Yeah, that's great. And I think it'll be good to get into kind of some of the specifics. But I did want to also kind of ask about the market in general. I mean, so you have these theses, you're executing on them, but the market's been really hot recently. I mean, that seems to be like the word that you hear used to describe it the most, which I guess is apt. Startup activity has been really active. There's been a lot of growth. It is a massive market, as you described. So there's a lot of value creation opportunity. But with that, I think, we've seen increased competition for deals, higher valuations in some cases. I mean, what are you seeing in the current market, and how are you navigating it all?
Yeah, I mean, I think we're seeing it across the entire asset class of venture, right. But I think within fintech and financial services, it's been an unbelievably rich area of both high valuations and exits, and also entrepreneurial activity and focus. We have fintech dedicated funds now in the market. You have many folks like us that are longstanding focused on the space. And it has been more competitive. It's benefited our company. We've put a lot of money into the ground, into the financial services world over the last decade. So a lot of those companies are benefiting from the interest from other investors. So we've been seeing some really nice marks within our fintech portfolio. And these companies that we have great faith in now have a lot of resources to pursue these long-term visions. And ultimately, I believe that in financial services, it takes real time to disrupt these markets. When you're talking about the mortgage industry, the payment space, traditional insurance and banking, I mean, these are industries that are not struggling by any means. I mean, there's a tremendous amount of profit that the incumbents are trying to defend, and I think these businesses, you have to really have a long-term time horizon. So we use our structure, our history, but also our roadmap approach to be competitive and win deals. I mean, you got to be deep in a specific area and be able to allow the entrepreneur to kind of skip the first 30 minutes of their pitch because the space. I believe that's table stakes in the market these days. And we've always had that approach. So it's benefited us. Now I think going that one level deeper and using the network of companies and executives that we have within these specific domain areas, the time we spend with the incumbents and industry players making introductions ahead of a deal process. You have to have a whole toolkit of things to compete in this market. And I think all of us use our sector specific roadmap focus to remain competitive and get in the best deals.
Yeah. And which of those are you most excited about today? Are there certain areas or themes that you're spending more time on?
I mean, there's quite a few. I'd say it's almost overwhelming these days how much opportunity I think exists in financial services. And I'd like to bifurcate it into a few different ways. So one way I split it up is kind of consumer versus enterprise. I still think there's just a lot of great opportunity to enhance consumer financial services, whether it is traditional banking experiences, underserved categories of customers, insurance, mortgage. I mean, these core products that will never go away, but need to be transformed for new digital expectations. And there has been a lot of progress over the last decade, but I think we're identifying some sub areas within consumer fintech that we are still excited about. I've written about the aging space a little bit and put out some thoughts publicly. We don't think that the last community of startups has really addressed the problem of the generational transfer of wealth that is going to be happening over the next 2 decades from the boomers to the subsequent generations. There's a whole realm of problems in terms of decumulation of wealth, the transfer of that, managing aging loved ones, and how you caregive to them financially. So that's one area we're excited about. Shifting gears, though, most of our portfolio right now, and I still think there's a lot of opportunity, is the APIs, the infrastructure, the great SaaS companies that are going to allow the long-standing financial services providers to fight back essentially against the last decade of the billions of dollars that has been poured into the brand building of more digital experiences. You know, Allianz and MetLife and Chase, we don't feel they're going away. I think they're going to be more inclined to buy software to enhance the customer experience, to enhance their internal processes, to stay competitive and catch up with the real margin advantage that a de novo fintech company that's been created over the last 10 years has. Jamie Dimon actually was speaking about this publicly over the last 24 hours and has been really ringing this bell. Banks and insurers and mortgage providers just have to catch up. And I'm very excited about the portfolio companies we have that sell software to these folks, because it can be a painful sales cycle, but it's unbelievably sticky once you get in. And if we can see a little bit of a shortening to that sales cycle, sky's the limit for our companies. I mean, we've had some great success with companies like Encino, Mambu in the bank software space. I have a company, Shift Technology and Insurance, Alloy, that's selling to banks. A lot of companies that have really seen tailwinds. And I think COVID and the pandemic, you know, as devastating it has been in many ways, was a real wake-up call for the financial services industry to really see that they need some digital offerings. They've been talking about it for a long time, but we're starting to see them move.
Mm-hmm. And in terms of like where this innovation is coming from, in terms of the entrepreneurs in financial services, is there a certain thread or kind of, you know, commonality between these founders? Do they have certain backgrounds? Where do you see the best talent coming from in the space?
Yeah, it's a good question. I think about the founders of our portfolio companies that have been successful in financial services, and it's very specific to each area. So I think a wealth management team, you know, if you're going to try and innovate in the RIA wealth management world, you need some real deep experience from that space. And we had that in Joe Duran and our team at United Capital. And as I think about where the wealth management space is headed, we have a very active roadmap in kind of the underserved elements of investment advice and what we can build on top of our investments and betterments in United Capital. That's a real active area. I think you need domain knowledge and experience in that space, as opposed to some others where we're seeing just really good teams that were real product people at other fintech startups, identify a problem, kind of come out of one of those companies, whether it be a Plaid or a Stripe, or even a legacy player like a PayPal. Our portfolio company, Melio, out of Israel, was really a team of really talented product and engineering folks from the R&D group in PayPal in Israel. And they've now built a wildly successful product that is allowing SMBs and small merchants to move money and pay out their accounts payable and manage all of their expenses. But it's really, they had the industry knowledge and experience from the space. I'd make one other point. You know, we do have a lot of former lawyers who are part of the co-founding teams of our fintech companies. We feel you need to be incredibly buttoned up and make compliance and legal and regulatory themes kind of a core tenet and core part of the DNA of a fintech team. It's not a space where you want to kind of break things and ask questions later. You want to be really thoughtful around those things. So our company Bread, which we recently sold to Alliance Data, all three of the co-founders had legal backgrounds. And I don't think it was a coincidence. And I'm actually seeing that in some other areas that I'm focused on right now.
And Bessemer invests across stages, but within financial services, I mean, how early are you typically getting involved with the companies and investing? Is there kind of, you layer on stage on top of financial services? Is there any themes there?
Yeah, I'd say our fintech practice at BVP is really a testament to our multi-stage mantra. I mean, it's not a joke. I mean, I've written checks as small as $250,000 and as large as $35 million over the last 3 years. And I was excited about each one of them. And it was just kind of the inflection point, the appropriate amount of capital for the stage of the business. You know, some of our really strong performing companies started as seed investments for us. You know, Spruce and Melio being two examples, one in the title insurance space, one I already talked about in the B2B payments space. They started with kind of sub $2 million investments for really significant ownership, but they were very thesis driven off of existing roadmaps and just great teams. So we were able to react and use our multi-stage focus to get our ownership then and kind of stick with them throughout the life of the company. And then I led a Series C in Shift Technology, which was an insurance software business that handles fraud detection and claim automation for the incumbents in the industry to fight back against the Lemonades and Roots and Hippos that are paying out claims really quickly. That's a business that I thought when I first met the team was going to take some time. And I didn't think the early rounds were the most compelling inflection point. I wanted to really see the go-to-market mature. And I thought there was a real data play long-term there. And I thought there was really still 4 or 5 years into the life of the business, an inflection point at that point where we could really give them the capital and help that was appropriate. So, and then a lot in the middle, Series A's and B's that I've led along the way where, you know, just try and really have a thesis-driven approach, high conviction, ideally spending months, if not years, getting to know the team instead of a 2-week process that tends to happen in our market. That's the way I think me and most of the partners at PVP think about it.
Yeah, that makes sense. And you mentioned a number of companies. Bessemer's got a great fintech portfolio. Are there like a couple companies that you're really excited about that you might want to highlight?
Yeah, one I mentioned quickly, I'd say that's worth highlighting is Alloy. And I think it just a good one because it summarizes a lot of what I've already said and is a good case study for that. A company I knew for 4.5 years before we led a Series A. You know, it takes time to build these companies was an earlier point, and we had looked at the seed round. We built a relationship, tried to help them add some customers. They ended up working with a few of our portfolio companies as clients. Alloy is an API, no different than Twilio or SendGrid, Auth0, which we just announced a sale to Okta. You know, these businesses where your product is an API that developers use to really shortcut the work they need to do, and you offload some of that work to a service provider. And Alloy does that for the identity piece of financial services. So when you're opening an account, monitoring that account ongoing, ultimately other decisioning you do tied to the identity of the customer. They're powering both fintechs and legacy players. So I bring them up as unique because we look at both consumer fintech and enterprise and have this rich history of developer platform experience across BVP. We loved what they were doing from the beginning, but thought it was going to be hard. So we just stayed really close to it for a few years, led a Series A coming up on 2 years ago. The company has just grown astronomically over the last 18 months and really efficiently. So, you know, these business models, when you do the work that engineers don't want to do, can be really great once they reach an inflection point. So we feel like this company has done it, and it's unique in that they sell into multiple markets with the same product. They're selling to mid-market banks I've never heard of. They're selling to large banks like Ally Bank, which is a key customer of them, and many others on the way. and they sell to innovative, fast-growing startups that are paying them significant fees to drive all of their identity decisioning. So I think it's a really high potential company that stemmed from roadmap work on the developer platform side, roadmap work on consumer fintech, and kind of empowering a lot of this whole movement. And one we're pretty excited about. And they're kind of post Series B, and I think we'll be ready for a growth round at some point.
Awesome. Yeah, that's definitely a company we're obviously excited about as well. So thanks for sharing that, and can't wait to see what's in store for them and for future, other companies in your portfolio and the future kind of next gen fintech companies you end up backing. So with that, just want to thank you for your time today. We've covered a tremendous amount in a pretty short period of time. You said it earlier, we could probably fill a whole day talking about fintech if we wanted to, but this has been really helpful, insightful. So thank you. Really appreciate the insights and the partnership.
Yeah, thanks for having me. And if anyone ever wants to talk about any of these themes, feel free to reach out to the Fairview team.